Okay. So, Brett,
Thanks for sticking around on a Saturday, and thanks for giving up your Saturday today. I'm going to talk about Goldshore Resources. Goldshore owns the Moss Lake project, 100% of it. It is a project we acquired from Wesdome Gold Mines back in 2021. And it had a historical resource of about 4 million ounces, which for us was a guide, a starting point. Last Tuesday, we put up a current resource on Moss Lake of 4.17 million ounces at about 1.1 grams. So now we have a current resource on part of the project. Within that 4 million ounces is what I think is the new story, and that is we have 2.2 million ounces at 2 grams. This is a higher grade kind of starter project or starter pit for a much larger project down the road. So, everything, when I look at and analyze companies, everything starts with people. And I think we've got a very experienced group of people. I have cut my teeth a long time ago at Kinross. I've run major listed companies in London and in Toronto, and was one of the founders of Katanga Mining in the copper space, which Derek talked about just now. Pete Flindell is my VP of Exploration. He spent 15 years with Newmont before he and I met at Avocet, and he ran Southeast Asia for me. We have a formidable board and group of advisors who, their purpose, certainly the board has purpose, but the advisory board really is about getting the story out there and getting the network out to their investors as well. This is where we are. We are in northwestern Ontario, about 100 kilometers west of Thunder Bay. And you can see this is the current resource we put out on Tuesday of 4.17 million ounces. We also have just about 850,000 ounces of a historic resource at East Coldstream. You can see the various belts here in Ontario, the Red Lake District, the Timmins District, and the Abitibi, which is just off the map. But we are creating what I think is the next big mining camp in the Shibandawang Greenstone Belt. We have about 18,000 hectares under license, and being the first thing that I look at is people. The second thing I look at is jurisdiction. We are in Ontario. It is one of the most mining-friendly jurisdictions in the world. And the third thing I look at is the deposit, and we're going to talk in a bit more detail about that and talk about it because grade means everything in this business. And the fourth thing I look at is infrastructure. We are on the Trans-Canada Highway. We have international rail on our site. We have international power from both the US and Canada and Ontario Hydro. 10-cent kilowatt-hour power, Canadian, is available to us. And we are 100 kilometers from an international port, international railroad, international airport, and certainly all the services required to build a big district-scale mining camp. Just looking at the cap structure, we're trading around 30 cents today. Got about a $45 million market cap, and we have about $5.5 million in the bank, and we're burning about $700,000 a month. Wesdome continues to be our largest shareholder at 27%. When we look at trading comparables, there's a number of metrics you can use to value companies. Looking at our global resource, we are valued at around $10 an ounce. Our peers with similar low-grade deposits in and around a gram are getting 2 and 3 times valuation for their projects, some of them at the same stage. So our view is there is a re-rating coming for Goldshore. There is a change in the sea. There is going to be a change in the sentiment. But the change in the sentiment is going to be accompanied by even a greater re-rating when we start to focus on this high-grade material. We're getting $18 an ounce for our high-grade material, and those who have high-grade projects like Probe and Marathon, and I'm not afraid to say their names because they're great companies, but they're getting $70 an ounce. Last year, Marathon was valued at $175 an ounce, and we're getting 18 today. So you can see significant upside in the valuation in our trading comparables to our peers. These are the typical low-grade projects that are in production or near production, and the focus here is really on the grade. You can see they're all around a gram, and when we have a 2-gram project, this is what is going to set us aside in in our space with our peer group, and this is why I think we're going to get a different valuation going forward, irrespective of the macro. And I know we've heard from Ronnie and we've heard from several people today and yesterday about the macro. I think even in this environment, we're going to see some strength. Another pillar of our value structure is about ESG. We have taken this seriously from day one. We have engaged with all of our First Nations host communities, and we have 2 agreements in place, the 2 required to get us through to construction. We also started our baseline study, environmental baseline study, over a year and a half ago. We have another year and a half to go. And that study is being run by a company that's affiliated with a First Nations host community. And they also do work for Barrick at Hemlo. When we acquired the property, we took the view that we were going to fly a VTEM survey, a mag survey over the whole property to understand the historical resource, understand the geophysical signature of the historical resource, and with that and putting the geology together, give us some really, really good high-quality drill targets on our 18,000 hectares that we have. And we came up with several good priority targets. And they are both conductors and resistors. We have 2 large VMS deposits on our property as well. So we have, this was a good guide for us to direct us to drilling. We embarked on a 100,000 meter drill program last year, and we're 75,000 meters through that program. But when I go back to the resource upgrade we just did last Tuesday, we've done about 102 holes now. Only 48 holes reported into that mineral reserve estimation on Tuesday on the 4 million ounces. We still have 52 holes to report in. So I see it as an interim update. We're going to do another mineral resource estimate probably at the end of Q1, and probably going to do another one at the end of Q3 or 4 to capture all the data and put it into our global resource. In March of this year, we started to see some high-grade trending, some high-grade lenses within the sea of low-grade material. As you can see here, some exceptional drill holes that we published in the marketplace through March, April, May, June, July. To the chagrin of the capital markets, we were putting good news out into a horrible market, and it gave liquidity events for our shareholders. So our volume went up significantly that day, and usually our share price went down. But that's the market, and we can't control that. But what we can control is looking for more of this material, and we have modeled this, and you can see the halo of low-grade material in gold, and you can see where the high-grade material has been collated. And this is what we're kind of wrapping around. This is called the shear domain, and the intrusive domain is the halo that it sits in. So our thinking is, on an early stage project, on the first 5 years of the mine plan, the grade's going to be very close to 2 gram. Even though you're going to be mining some low grade, you're going to be mining quite an exceptional amount of high grade, as the pit is quite narrow at the very beginning. The deposit is subvertical. The first 5 holes we drilled were well over, some were 900 meters, some were 1,000 meters. But the mineralization and the style of mineralization goes right to the basement. And it's encouraging because it's going to provide for underground potential later on. And again, that's upside that we still need to define, but we have to prioritize what we're going to do. One of the priorities will be to upgrade Coldstream to a current resource. You can see the same geological setting at Coldstream, and we need to get some of the holes reporting. We need to do a mineral resource update on East Coldstream with 850,000 ounces. And with the high-grade envelopes here, you'll see it sequence into the mine plan quite early. One of the things we haven't talked about a whole lot in the market is what we have up in the northeast end, which is North Coldstream. It looks like a VMS deposit, although there's cobalt in it, which makes it very odd for a VMS deposit. You can see the old mine workings here. This was a mine run by Noranda and picked up by Xstrata in the 80s. But it ran for 20 years. They made a copper gold concentrate. And our first hole at surface, this is from about 8 meters at surface, we hit 62.8 meters of 0.88 copper equivalent. That was probably to be expected. Obviously, you're drilling through an old mine, and they didn't do things for free back then. But I see this as a tremendous opportunity. There is an opportunity to open pit this, and there's an opportunity to go underground at a later stage. It's open at depth as well, and we have 2 of these on our land packages. So with that degree of copper and cobalt credits, we have to make some decisions. And I don't know what those decisions are going to be. We could spin this out to the benefit of the Goldshore shareholders and call this Copper Shore Resources, raise $5 or $10 million and prioritize the drilling for this. And that may make sense. Critical minerals, I think we just talked about that before earlier. The critical mineral list in Ontario includes both copper and cobalt. It should include gold. I'm going to lobby for it, but it does include copper and cobalt. And there are incentives to do something like this. So we may accelerate this. I need to look at the options, and I need to look at the cost of doing so. This is the old resource from 2013. Graphically, I'd just like you to see the difference from what we've produced in this mineral resource estimate, and you can see it right now. So if I toggle back and forth, you can see the significant increase, 33% increase in tonnage and ounces, and you can see these high-grade lenses in the middle of it. So when we go to mine these will be a focus, and they'll come to the fore quite quickly. So the whole concept of our resource model was modeling the shear zone and altered diorite domains, and we're going to continue to do that because it is going to guide us at how a PEA is going to look. I said to the market, we're going to do a mineral resource update in Q1 of next year, and right behind it we'll do a PEA. And I changed the tune on that when we started to hit these high-grade lenses. I figured, let's get the first mineral resource out now. Let's understand what it looks like, and let's do a secondary and probably a tertiary update next year, at which time we can evaluate to do a PEA at that point in time. And the reason is simple. These PEAs are a snapshot in time. And I can tell you what the economics of this is because I've done this for 35 years. This is going to be a $300 million CapEx company. It's going to have a 140,000 ounce production profile with a $900 margin and a 15-year mine life. And that's a $100 million free cash flow company. And development companies at our stage trade at two times cash flow, or about 0.25 or 0.3 times NAV. That's a $200 million company. We're sitting at 45 today. So I know the math on this, and we can do this. However, I just don't see spending $80,000 now to create a snapshot in time so I can get everybody excited about that is the best use of capital. Pete has done an amazing job at site. We have added ounces to this deposit at $5.75. We acquired these ounces for $13, which are actually reasonably cheap. It takes $30 to find gold, but because we had such a template, because we had such a base, we were fortunate enough to be able to put ounces on our statement for quite cheap. This is where we sit, and if I isolate the high grade, you can see, and the graph is logarithmic, so bear with me on the size, the location of these, but you can see where the high grade is the highest grade open pit deposit at development stage in Canada today. You can see where we are, and you can see where our next mineral resource is going to lead us, the immediate potential, we call it, because it's quite easy for us to project what the next mineral resource estimate is going to be, based on what we've done and the work we've done so far. And you can see Detour and Cote in the distance there, Detour having 30 million ounces. And I want to be up here standing next year and show you a path to 30 million ounces because I think we have the property to do it. You look at our pit shell on top of Moss Lake. This was done very conservatively, and we had a lot of discussion about this because the majors they all use a little bit different, but they all land somewhere for evaluating resources. And they use $1,500 pit constraints in their whittle optimization. We use 1,500. You'll see our peers use 16 or 17 or 18 because it gives them more tons and it makes their projects more robust. But when analyzing, you have to sensitize them down to 1,500 because that is the industry standard of what majors look at. We use the same operating inputs. We use $250 for mining, $12.50 for processing, and $2 for G&A. That's exactly what the majors use. So we're trying to do this to a standard that Pete and I kind of grew up through. Here's the pit shell. You've got a 350 meter pit. This is just on the project today, at the size today. This is what we brought into the resource. Significant upside at depth. Significant upside to make this pit bigger and deeper over time as well. Last minute. Okay, real quickly. You can see this 35-kilometer trend where we have 3 kilometers of known resource and current resource. We have an 8-kilometer strike underneath it where we have known drilling. And our process over the next 6 months is to get through the next mineral resource update, evaluate when we're going to do a PEA, continue on with our metallurgical studies, and continue drilling. We're running 2 rigs today. We're going to continue to run 2 rigs. We think it's prudent, even in this market, to continue the development of this company. Dilution is painful at these numbers, but we don't have many choices, and we're not going to stop. So I'm getting pressure here from the side. I am going to give it up, and maybe we can take one question. But thank you for listening. We have a tremendous project in a tremendous location with the right people doing the right things at the right time. So happy.
Thanks a lot, Brad. So, do we have questions? If not, I start. Wisdom is your biggest shareholder.
Yes, it is.
They have 2 mines in Ontario, I think, and they have. Yeah, and okay, there's one with a smaller mine, yeah, and the one in Quebec. So, what will they do with 27% of the company? What do you think?
I think, well, I can only speak to what I think their strategy is. Their strategy was to sell Moss Lake to get exposure to the gold price and to get exposure to the project development. Let somebody else do it. Wesdome are high-grade underground miners.
Yeah.
They're not low-grade open pit specialists. They're a completely different skill set, and they don't have it. So they're having. Unfortunately, we ran headlong into the worst market in my 35-year career, and we're going to run headlong into the best bull market in precious metals in my 35 years.
Kingfisher.
Starting probably next
Yeah,
year or at the end of next year. So they will get exposure to it, but they are sellers. They want to lower their position, and quite frankly, we're under NDA with almost every major mining company, and we're trying to see if there's interest to maybe block trade and bring in what we think is a strategic. This project needs horsepower. The speed to market is very important, and this project needs horsepower. As a junior miner, I can't give it, and I certainly can't give it in this market. I can't go raise $50 million without getting hammered.
Yeah. But this sounds like you will do the spin-out. Then it makes sense.
Again, it's something we need to discuss internally, but I see it as maybe a pretty good option and a good option for shareholders.
Yeah, true. Because not everybody who's investing in gold wants to invest in copper and
exactly
vice versa.
Exactly. Yeah.
Right.
Thanks, Derek.
This was interesting.
Thank you.
Thank you.